Morning, everybody. It is 27th of March. We're finally getting some pretty decent selling on the markets. FTSE's down 60 odd as we speak. First thing, it seems to me that the Trump effect is starting to come out in the market a little bit. Obviously, if you've been following, he's having real problems with his healthcare reform. He's not got that through. There's no word on the tax cuts yet. There's no sort of word on the infrastructure spending, etc., etc., and all this sort of optimism started getting priced into the market back in sort of October, November last year. It's been rallying ever since. We're starting to see that sort of beginning to get priced out again, as though it's sort of unwinding what people thought was going to happen. So yeah, we're down. We had a fairly bearish close on last Friday on the U.S. Indices as the result of the healthcare bill became knowledge, and we've seen some heavy selling this morning. U.S. futures are down a lot already. Dow futures are off about 130 as we speak. But yeah, this is healthy. I think we needed it. Markets are meant to be a two-sided thing, and it's been one-sided for such a long time now. So I think a nice pullback is healthy. We've got a really weak dollar. They're about to approach their debt ceiling again. They're $20 trillion in debt now. It's crazy, really. I guess they'll just raise the ceiling again. Issue some more bills and keep paying for it, but they really need to. The debt ceiling is meant to be there for a reason, to stop overspending, and at some point you really think they should draw a line under it. It's there for a reason, but they don't seem to be doing that. So the US dollar is getting pretty hammered, and not surprising really, because of the amount of the debt that country's in, and somebody's buying gold pretty heavily, which always makes me a bit nervous about the stock markets. It's as though somebody out there knows there's something not quite right, or expecting a bit of a retracement in the stocks. Anyway, be that as it may, I've just closed. If you're following, just closed the Easyjet position. Made a nice profit on that. Paid 9 to get them back, which is a little bit more than I'd usually like to pay, but owing to everything that's going on, I'm slightly getting more bearish on the markets in the shorter term. So I've decided to take this off the table. It's still a good trade. Paid 9. Well, initially I sold them the May £9 puts. Sold 3 of those for 52p, taking in £1,650 of premium. I've just bought them back for 9p. So £270 cost of buyback, and that leaves me with a £1,290 profit on that trade. Easyjet, the pound, as the dollar's weakened against everything, but the pound's well back over 125 now as we speak. One of the few things that sort of benefits, or that's been holding up, is Easyjet, as it makes Brits going abroad, it makes their holidays, they've got a bit more buying power with the pound. So it's one of the few ones that sort of doesn't have that sort of correlation like the overseas dollar earners do when sterling goes down. So this one has actually held up okay as sterling's gone up. But yeah, I've done this trade twice now in the last 6 or 7 months. It's been a good trade both times, so I'm just taking it off the table now. I can't complain at that. And we shall wait and see. If you're following, if you've been selling the FTSE 76 cores, they're looking very good now. They've already halved in value, and hopefully if there is a decent pullback, there's going to be some good opportunities. All the sort of UK blue chips that have been sort of bought pretty heavily, there could be some good opportunities in the coming weeks. So yeah, the Easyjet trade is closed, and we'll see what the rest of the day brings.